Well, as we've been talking about, tech companies like Google, Meta, and Microsoft are moving fast on artificial intelligence. Alphabet is looking to lead in the AI arms race. All of them are looking to lead, but in the Google parent company's earnings call, CEO Sundar Pichai said, our continued leadership in AI and our excellence in engineering and innovation are driving the next evolution of search and improving all our services. Let's bring in Brent Thill, Jefferies senior analyst, to weigh in here. Who do you think is going to be on top here? Or is it even sort of a zero-sum game? Can everybody be winners, Brent?
Yeah, it's not a zero-sum game. It's going to be Microsoft in the enterprise and Google and consumer. And Amazon will also be a beneficiary, but more on the enterprise side with Microsoft. So 2 enterprise winners, I think 1 consumer winner, clear winner. Obviously, Meta, you have to bring into the conversation around AI as well. Anyone that's used the Instagram service knows how good the matching engines are in terms of what you're interested in. So we see it as the companies in AI that will win are the companies that have the data and the users. And those are, again, Microsoft, Amazon, and enterprise, and Meta, and Google, and consumer. Those are the big 4. There'll be room for others. Oracle can benefit on the enterprise, but probably won't benefit as much. And so right now, we see Microsoft as probably the clear, if you had to pick one, they are ahead of this. They started this whole AI arms race. They were the first ones to go at the beginning of the year, and they've obviously made the biggest investments. They've effectively now layered in a CapEx number that's now $12 billion higher. We were at $32 billion. Now we're at $44 billion in terms of CapEx. I mean, that is a lot of NVIDIA purchases. That's a lot of data centers. That's a lot of infrastructure they need to get ready for this AI rollout. And again, I think it's going to be phased. It's not going to be overnight. We're not all of a sudden going to move into the AI house. It's going to be a slow, steady adoption pace, and none of these products are really available yet until the end of the year in a big way. So we're going to see this as more of a 24 event than a 23 event. So again, the wave is coming, but the hype is, I think, a little maybe too strong, and you're seeing that with Microsoft stock down. Some investors felt like they would feel it more in the current numbers. Again, you can't feel it when the products aren't shipping. So we remind investors, you got to wait for the products to launch. So Microsoft's done a great job of hyping it. So we got to get these products out in the market.
With all that hype, is there any type of kind of margin contribution that you look at as AI needing to generate a certain baseline of margin contribution in order for the valuations, in order for the hype that's been put forward by companies and their executives to make sense?
So AI long-term will be very margin accretive. If you think about today, it's not. And what Microsoft guided to was flat margins for next year, which is incredible considering all the investments they're putting into AI. When you think about, there's no revenue right now really from the products. It's they have the marketing, they have the training, they have all the product development, they have the CapEx, they have everything. So basically, they've said that it's going to be the next half of their fiscal year where the revenue starts. So the entire first half is really not a lot of revenue. And to have flat margin tells you how margin accretive this can be. And then you think about year 2, year 3, year 4 in software, most of these customers, if you're an Office user, you're paying $30 to $40, $50 a user. You're not paying $30 incremental for the AI Copilot. So you're basically increasing prices by 50 to 100%. That's incredibly margin accretive. It's not like Microsoft has to go out there and drum up a bunch of sales. Like, it's going to be self-fed. The cost of sales is going to be low because the ROI is so high. They'll have the inbound demand versus pushing this on people like you're at a used car sales line. That's not going to happen. So we think over time it's going to be margin accretive. And the fact that it's actually margin neutral with all these investments is actually pretty amazing to see. Obviously, Microsoft's cutting expenses other places to fuel the way for AI investments. But this is no doubt a margin accretive over time.
Brent, just to put a fine point on it, if people can't tell from how you're speaking about it, you've got a buy rating on the stock. You've got a $400 price target. So you think there's room to go up from here. And presumably you would say that maybe today's drop is a buying opportunity. Given what you're saying, do you think Microsoft needs to do a better job itself of telling the story that you are telling? You said, it's really been hyping up AI. has it been doing it too much? Has it not managed expectations properly?
Yeah, I mean, it's a good question. I think, look, Nadella is CEO of Microsoft. They missed cloud. He got them back into cloud. He fixed their server business, their cloud business, their virtualization business. So they got back into the cloud game because of Nadella. He is not number one in cloud. Amazon is in infrastructure. So if you think about ultimately what's happening right now is, they didn't want to lose this race in AI. And they're borderline, going out in hyping. I've never seen this before, where they've hyped it so far ahead of the launch. So yeah, I mean, but they don't want to lose the war, and they want to own the narrative, and they're controlling the narrative. The callback with Microsoft last night, when I asked, I said, hey, maybe you're launching too many products. Maybe your customers are going to get confused. There's too many AI models out there. And they said, we're in hurry up offense. As they get done, we're going to unleash them. So this is, they're not going back to the huddle. They are literally on the line, ready to roll, and they want to plow everything over in front of them. In football analogies, they are ready to roll, and they are not going to hold back. And they do not want to lose to Google, or they do not want to lose to Amazon, because they lost that cloud war to Amazon out of the gate. They're not going to lose this one.
All right, very much a Seahawks with Marshawn Lynch days type of strategy that they're employing then, I suppose, deeper into the football analogies. But I guess pulling back from those, let's talk a little bit more about Google, or Alphabet here this morning too, and their earnings. A different strategy, perhaps, but at the same time, there's certain parts of the business where they're going to hope to leverage AI and lean into that. Where do you think it's going to be immediately evident that they're having success with their own artificial intelligence efforts?
Well, I think they're having it today. I mean, he pulled an LL Cool J, don't call it a comeback. We've been in AI 7 years. And again, I use the analogy for any consumer. Jump in your car and go to work on Waze. It's not Judy or Joe telling you to turn left or right. It's the AI engine that's telling you where the traffic is, right? Turn on YouTube TV, and in the morning it'll tell you, are you interested in your local news or ESPN or some other show, right? It surfaces the content you want right in YouTube TV as you turn it on. When you do a search and look for a restaurant or look for this is infused with AI already today, and I think this is the point, which is it's infused today. And if you look at their spend, Microsoft had to take their capex from 32 billion to 44 billion. Google didn't really bring their capex up in a material amount because they've already been investing. And so what I've said is there's so much technology inside Google that we can't see. They're going to unveil, and I think we're all going to be blown away. As some of the top computer scientists that we've interviewed that teach at Stanford and have been part of Apple and other major tech corporations, they're like, this is crazy that Wall Street doesn't think they have good AI. They have better AI, and they've contributed more to AI than anyone. So we have a situation where Wall Street's like, Microsoft's going to crush them in AI. Their bar demo blew up. Short Google. That's wrong. And that's why Google stock's going higher, because investors are underweight Google because they think they're going to get run over in AI, which is not true. This is not a zero-sum game. They're both going to win. And Alphabet is underappreciated for AI. And I think, again, they mentioned it 52 times in the prepared remarks. 52 times. And that wasn't even in the Q&A. Okay, it was more than Microsoft. And that tells you that they're upset, and they're not saying this, but I got a sense they're not happy with how Wall Street's treating this or Main Street's treating this. And they're going to be clear what they have. And I think we're all going to be shocked. Stock's going higher.
Yeah, I picked up on that a little bit at the end of the call when Philip Schindler was asked a couple of questions about how they're incorporating AI into tools for advertisers. And he said, well, I did talk about that earlier on the call and gave sort of details about how it's being incorporated. Brent, I do want to ask you another question that's very important about Alphabet, and it has to do with Ruth Porat. Obviously, she's getting this big new role. Are they setting her up to be CEO eventually?
Absolutely could be. And I think that, she did a fantastic job on the buyback. She brought the buyback to Google. They've been leaning in. They've been buying the stock back. I think investors have been disappointed with their investor friendliness. If you think about Microsoft giving guidance and more color and doing calls and being really transparent and bringing people on campus, I mean, Microsoft has done a phenomenal job. And I think that investors want more. Institutional investors want more out of Google. So I'm hopeful the new CFO that comes in can give a little more color and analysis. We didn't maybe get that. I think operationally she did a phenomenal job, and well deserved, and super happy for her. So yeah, I think it seems like from an operation perspective, it sets her up for better things ahead.
Brent, while we have you, let's pivot to one other company that did report earnings and has seen investors react, but quite negatively here, especially after the earnings dropped. Snap, ultimately, just some disappointment from the street that is evident in the stock price reaction as it moved lower by about 17%, still lower here this morning by about 18% here. Just want to get kind of your general take on what the company had to say, and if this is a company that still is worth investors kind of holding or kicking the tires on at all.
We don't have a buy on it, as our team has covered this. I think it was the disappointment in the operating expenses, obviously coming in, and the losses that they're seeing. And I think ultimately, I've said this repeatedly, when we poll teenagers and younger audiences, most of them are using Snap because they don't want their parents to see their instant messages. They use the messaging platform, but they're not influenced by the content on Snap. They don't see an ad and then convert. They don't have the money. The parents have the money, right? And so ultimately, I think this has been a younger audience tool. It's been a communication tool, but they're not able to monetize the users the way that they should. So there's an incredible viral adoption of the younger audience that loves this. They can see where their friends are on the map. They can message. They haven't monetized it. So this is an opportunity where you have the users, but you don't have the money. And ultimately, they need to fix that. And again, I think this is a long road back.
And I'm curious where it ends, Brent. Two final questions on Snap. 5 years from now, one, does it exist as an independent company? Two, does it exist at all?
I think right now there's a lot of questions. I mean, TikTok and Meta with Threads is really taken over, with Threads and Reels. And so I think when you start to think about there's been some share that's been stealed away from them. So do they need a partner? Do they need to be acquired? Is there some other roadmap that they need to go to, playbook they need to go down? I think they're clearly showing that that's the case. I mean, there's financial stress here. So when you have financial stress and you're not benefiting relative to others, you got to look at alternatives. I don't know the exact alternative, whether it's a partnership, an acquisition, but they've got to do something different because it's not working.
Brent Thill, Jefferies senior analyst, thanks so much for joining us this morning, and we're going to let you go before that sun rising in the east starts to hit your eye. We want you to be safe over there. Thanks so much, Brent.